Steve.
1 hour. Yeah, so I told her what we were talking about how like she's basically never said an Indian name, so I had her say your name and Chris butchered.
Yo, you're Indian?
Yes, Vitaly, you knew that.
What would?
Wow, we have 113 people here in 18 seconds. That means they want to wait. So did you record your wife saying the thing or no?
Yeah, let me see if you can hear it. I asked her
I would
to
love
say.
to hear this.
I asked her to say. So, babe, if you're watching, do what we just recorded in the kitchen.
Okay, mi amor. Se llama Amit Kukreja.
Amit Kukreja.
Kukreja.
And the other one is called Chris Patel.
Chris Patel.
Savannah, can you say Chris Patel? Can you say Amit?
So you made my
She
daughter
yelled.
cry.
No, Chris
Yeah.
made her cry. As soon as you said Chris, she was like, Regional Banks.
She was like, nah. She started screaming like crazy. So she says, Amit Kukreja.
I've heard Kukaracha before. I've heard everything, bro.
Oh,
I've heard
God.
everything.
As soon as I tell her that,
Yeah.
that's it. That's going to be your new name, actually. I'm going to say, can you
All
say
right, well,
Okay,
Steve
all right. Well,
Tesla Bear?
Let's get to this. And yes, Amit is now in my bathroom. I agree.
Well, by the way,
All right.
I did send the link. I did send the link to Warren. He's traveling, but he was interested to come on, so he might just pop in at some point and yell at everybody.
Okay, so Steve, you have 45 minutes because then we have to tear you apart for 15. So go
Yeah.
ahead.
Yeah, you got to give us at least 15 minutes.
I'm going to be quick. I'm going to try to be quick with it and have a real conversation about this. I dislike the title because I am not a long-term bear. I just don't like the current valuation. Full disclosure, I am a shareholder by proxy because my wife purchased shares. So I own shares directly. I have exposure indirectly through index funds and total
Steve,
market
can you
funds.
tell us the impetus for you to be so inspired to come on the podcast today? What exactly happened in the past
And before
week?
we start, I mean, I just want to let the cat out of the bag. Chris Patel was deported, so he won't be on this podcast.
Unfortunately,
Sorry about that, guys. He's back in India.
It was part of the
Back in India.
peace treaty deal in Moscow. We had a prisoner exchange, and Chris.
They wanted our regional banks. We weren't willing to give them up.
He was like, "I'm not giving up my shares.
Chris
I'm not giving up my truth."
Chris went over there to negotiate.
Okay, all right. So we're talking about Tesla. I'm just messing around. Go ahead.
Yeah, so I dislike the current valuation, but I think that it could be a very good long-term play because there's a lot of catalysts. So I made some slides. I think you guys are going to really like them. Let's have a conversation around them. So admit, I taught myself how to present everything. So
Okay, very good.
So can you what is the case that you're trying to prove? Like, can you tell us what you're trying to prove with them? Are you saying this is going to prove that Tesla is overvalued, or this is going to prove what Tesla's valuation should be? Like, what is the
Both.
thesis? Oh, both.
Both.
Okay, cool.
I'm going to hit all points.
Okay.
So can you see the PowerPoint?
Yes. By the way, before anyone gives me shit about drinking soda, this is 0 sugar. Okay, so this is
All
not.
right, great.
There's no
So-
sugar.
Yeah,
Look, Tesla's a great company. I don't think we need to spend a lot of time on this. Revenue growth, huge.
Steve, real
exponential
quick.
growth.
Steve, real quick. You couldn't put the logo on the slides. You couldn't make
No.
it colorful. It's just like
No,
you-
stop.
It's all business. It's all
All right,
business.
All right, whatever.
It's like an
So-
end-phase presentation.
So for Carlos and Vitaly, I get the company. You got Cybertruck, you got charging stations, FSD, robotaxis, Megapack, robots, renewable. Like there's a huge long-term catalyst for multi-sectors, and that's why I am not a bear for the long-term value. I just dislike the current valuation. So great margins when you look at the traditional auto companies. I mean, Tesla right now has a 13.66% profit margin. And when they start getting their reoccurring revenue and everything else, that could definitely go up. The legacy automakers are not going to catch them with profit margin in my mind. And that's huge bull case.
That's a great slide. That's a great slide.
Can you come back to that for 1 second? Because
sure.
I'm surprised that Honda's so high, considering the price point of their vehicles and the number of units. Interesting.
So the one thing I do want to say is all the numbers that you're going to see, if they're not my assumptions, they're real numbers. It's from Seeking Alpha and Tesla's investor relations. So none of this is bullshit. These are all real numbers.
As opposed to the other stuff that we talk about every other
No,
time.
no, no. I'm just saying, like
Understood.
when I present, it's real numbers, unless I specifically say these are my assumptions.
Right.
The turning point for me with Tesla was Q2 2022.
Okay.
Because this proved it's not just an auto company. And I used to look at it as just an auto company
Mhm.
because 100% of their gross profit came from autos. Q2 2022 was the turning point where they started generating gross profit every quarter outside of autos. And to me, that's huge because that shows that those businesses are not just revenue generating, they're generating gross profit and trickling down to the bottom line. So you can see that these are definitely going to continue to go in the correct direction that they want them to. So from the catalyst, charging stations are the one that I am most bullish about. Carlos, this is what I was teasing you with. I think you're really going to like my charging station analysis.
Okay.
So I went on Tesla's investor relations and their website, got the numbers of charging stations and the wall connectors.
Mhm.
I then went and looked at their different tier levels for how much it costs for the superchargers and tier 1, which is the 60 kilowatt per minute. So I don't have a Tesla 2. You do. You can let me know if these numbers are incorrect.
Mhm.
This is what I was able to find online. So what I did is on the left side, they have 85,169 total chargers. Minutes in a year, 525,600. Minutes of all charging, 44.76 billion if they're running at 100% capacity. So the orange at 100% capacity, based on averaging out what the 60 and over 60 kilowatt hour per minute rate is, could be 8.7 billion of revenue at a 20% gross profit margin. That could be 1.74 billion gross profit. 50% usage drops down to 872 million gross profit potential. At 25%, 436,000. Now that's just the charging stations the way it is.
436 million.
436 million gross profit. Yeah, at a 25%.
Can I ask you,
run
the only
rate.
thing I'm not sure about, where did you get your charging at or below 60 kilowatts per minute? Where'd you get your per minute kilowatt charge? Where is that? Where'd you get that from?
I believe it was from either Motor Trend or another site that I found at. Those are the numbers. I was piecing it together and I was going by different things I saw online.
You're saying that's what they charge when you're at a supercharger? Which number is the supercharger?
So
It would have to be everything above 60
above
kilowatt
60 kilowatt hours is 26 cents per minute. At the 60 kilowatt per minute, it's 13 cents. Now, what they did say is different areas have different costs for energy, so it could vary. And these were the averages they were showing, but it changes every day based on energy rates and that stuff.
The other thing is the wall connectors is interesting because wall connectors are what they sell for people in their homes. And so the customer's paying that directly. Tesla doesn't make money on those chargers.
So when I was on their site, the wall connectors, they were saying are destination charging sites, which is like at a hotel or something.
There's no, Tesla doesn't make anything from that.
Yeah, they don't make money on those.
That's the hotel installing a charger for their guests, and maybe they charge their guests or maybe they don't. But that's something Tesla doesn't control any of that.
Like Tesla would sell them the charger, so they'll make the $500 on the charger. Probably like one or two of them might be comped with a local rebate. But after that, the charging is, they don't make any money on that specific charge. They only make money on superchargers. And I don't think I've ever seen a supercharger that was below 60 kilowatt hours.
And first of all, it's 11,000 chargers from what I
that was another thing, that there are not 45,000.
And your numbers here for the per kilowatt hour, I think, are totally skewed because I'm paying at home charging 13 cents a 13.5 cents a kilowatt hour. That means, and I've supercharged around the East Coast, and that's, I think I was paying 40 cents a kilowatt. So it jumps up quite significantly if you're actually charging at a supercharger. It's not as expensive as a gas station, but it's getting there where it's like a gas station.
Yeah, I took the total chargers directly from Tesla, and the kilowatt hours is what I found online. So that's why I said these are assumptions.
This sounds like, I think this slide is a little bit.
May 1st, 2023, Tesla Charging official account on Twitter tweeted that we are now operating 5,000 plus supercharger sites across the world. May 1st.
Sites. So,
but how many actual chargers?
Stations,
right. So that's what I'm looking for next.
Yeah, it was on the slide. They have 45,000. I wish it was showing the bottom.
Okay,
But I got it
25,000
all
chargers.
that's from
But
their
it's also you also have to see what the use rate is. Like how busy are they? How many hours per day are
and
they?
that's why I made 100%, 50%, 25% capacity.
There you
And
go.
then
It's
if
12,000
you think
locations.
about them,
12,000, right? 12,000. Okay, right.
yeah, if you think about them doubling it out, and then with Ford, GM, and whoever else they have, they could run at a 25% usage. And hypothetically, if these numbers were correct based on the kilowatt hours, when in the future, this could be close to $1 billion gross profit line item. Like,
Well,
I'm bullish on this.
to Vitaly's point about approaching the price of gas, from what I understand, Tesla is going to charge the other OEMs slightly more per kilowatt hour than they would Tesla owners. So there's going to be a small premium that they're going to have. Like, it's kind of like the difference between paying for regular or premium gas. They're not going to get the same rate that Tesla owners are.
Premium electrons. Those are the best ones.
Well, I mean, think about it. Yeah, you got you got a guy coming in there with a Hummer, 200 kilowatt hour battery. You have to pay for it.
Do you want the extra fine or
The
electrons?
supercharger market's huge. So this is what I disagree with. The current valuation, not the long-term possibilities, the robo-taxi market, ARK Invest projections, and bull cases I've heard for price points on different places. So ARK's 20, these are the brand new ones from their April 2023 research report. Their bear case is 1,400 per share. Bull case is 2,500 per share. Expected value 2,000.
And each of those has a 25% chance. What's the largest percent chance then? If each of those is 25% chance of probability.
Well, their expected value is 2,000. So that's their base.
Okay.
Yeah.
Okay.
So they're saying Tesla's going to generate just over $1 trillion in revenue in 2027. EBITDA is going to be $354 billion. Enterprise value is $6.1 trillion. So here's where I start to look at things a bit differently. The autonomous ride hail is where I cannot get to. And the next two slides are going to show you why. Their bear case is that Tesla is going to generate $200 billion on the bear side in 2027 from autonomous ride hail. And on the bull side, $613 billion. So I looked at what the actual global taxi market is. I got two different reports.
Even if you just go back, you're saying that they're going to sell. Who says that they're going to sell?
I'm not saying this is from the ARK Invest research.
But it says 20.7 million vehicles sold in 2027. That's inaccurate. Their own projection is 2030 for that.
That is their bull case.
Okay. Oh, that's their bull case. So
they're so the far right column is the bull, the middle column is their bear. So not my numbers, they're ARK's numbers. So I found two reports on the global taxi market. I don't know which one's correct, so I put both of them in here. First report I found was that the taxi market's going to reach 120 billion by 2027. That includes Lyft, Uber, and all these other companies, Get, Dubai Taxi Corporation, Bolt, everything else.
Mm-hmm.
The next one that I found said by 2028, it's going to hit 388 billion. And that also includes Lyft, Didi, Uber, the other ones.
Does it include like Waymo Cruise expanding and all that? Oh.
I would think so. I didn't pay for the actual reports. I got the summary pages.
Right. One other question from this on this slide and the one before, when you say that the global taxi market is projected to reach 388 billion, is that revenue?
Revenue.
Okay, that's revenue. Okay,
revenue.
Across all the companies, revenue.
Correct. And in 2019, it was valued at 70 billion. So even if we look at the high estimates on this for 388 billion, the problem I have with Robo is, let's just hypothetically say we get there where autonomous is mass adopted. ARK's numbers are showing not double, but 70-80% more on the bull side, and they're showing like 60-70% on the low side of Tesla taking the whole market. So it's hard for me to get my mind around that. And I think a lot of the price assumptions people are coming up with are due to what may happen. And I don't know what's going to happen, but when I look at the high side of what research companies are showing, the 613 and even the 200 billion is hard for me to get to. So that's
what about Ron Barron, who said, I think, was it 2025, 2026?
He said $500. Yeah, I saw that the other day. We're going to address that right now.
2025, right? And then he said what? He said, didn't he say
1,500, 2030.
1,500, 2030, right? Okay.
All right. So I look at things in numbers. This is just over the past decade. We look at the top companies right now. It's Apple, Microsoft, Google, Amazon, Nvidia, Tesla, and Meta by market cap. Those are the big boys. This was taken after hours today. These are all up-to-date numbers. So this is what each company has generated in revenue, gross profit, net income, free cash flow, and their margins over the past decade. Just wanted to add that snapshot in there. So this is the one I want to spend some time on real quick. These are the trailing 12-month numbers for those companies. Right now, Tesla is second to the right. They're trading at a $755 billion market cap, more than Meta, and they are generating significantly less profits. This is where I have a problem with the current valuation.
Well, we know growth matters, so I'm not sure why you'd have a problem with that. No, I don't think. Are you arguing they're growing slower or equal to Meta? Even I would say that they're growing faster than Meta.
Growth does matter, but if you're going to assign these types of multiples, and a lot of the reports,
but that's what the market does. Why did Amazon have 1,000 multiple on it?
Amazon, I'm a shareholder of, and a little overvalued, in my opinion.
I'm saying it had up to 3,000 PE at some points, but why? There's a reason for it, right?
The market is forward-looking. There's no question about that. The problem is when you start assigning these types of numbers to companies, the paying $755 billion, you're paying the current value of all future cash flow. So, and I did a full DCF for you, because I know that you guys had mentioned that on a previous, and I made it live so we can play with the numbers together. Also,
I had a rant about that.
Right.
Yeah.
Here's the thing, but even if they're overvalued by like you're saying by today's metrics, as long as they continue to grow, well, what Elon was saying, say 50% or close to 50%,
it would still be a good investment for 10 years from now. And that's not what I'm disputing.
You understand? As long as they continue to grow and continue to expand, then the market's going to continue to give them that multiple. And
that's not what I'm disputing. I'm just disputing what people are paying for it right now. Mm-hmm. And here are the slides.
Okay. So 2024 forward PE, what do you have? 48, right?
Tesla 2024 47.83, yes, and 2023 forward PE is 68.
So they're actually going to have some compression. You're saying as they grow, they're going to have some compression.
They are, based on the analyst projections, they are going to compress. But once again, they're not a tech company. Their margins are not of a tech.
They're not a tech company.
They're not a tech company until they're generating more than 50%.
You said you understood the bull case, right?
Oh,
yeah, in the first slide.
Wait, hold on. Can let him make his point for why they're not a tech company. Then hyenas can go after him. Go ahead, Steve.
Numbers matter. And it's not that let me rephrase that a bit. They are an automotive innovation company that is very focused on tech. But until more than 50% of their revenue or 50% of their profits is coming from reoccurring revenue, not auto sales, it's hard to justify giving them a tech multiple.
Okay, well, this is
when Amazon was selling products to you, just shipping to you books, they were getting tech multiples for shipping books to you.
Yeah,
before AWS,
tech company.
Before AWS, so they're a tech company selling books just on the
Amazon's
internet.
not really a tech company.
Oh, they're not a tech company now too. Okay.
When you think about what they've built out and where they're spending the most of their capex on is building out a fleet infrastructure for delivery. AWS is a small component of Amazon's overall company. Their mass success factor was building a better mousetrap than every other person.
So they're also overvalued right now because their PE is a little bit high.
Oh, when you look at Amazon's free cash flow, they are negative. Their profits are very small. I mean,
they're also overvalued.
Okay, but
I said about 3 minutes ago that I think Amazon's overvalued. I'm a shareholder.
Okay, but getting off of Amazon for a second, I want to go back to you saying that if Tesla, first of all, my question is if Tesla's not a tech company, then what is it? Like, what would you frame it as? I think you said it was an automotive company. You said it was an automotive company.
I think it's a conglomerate at this point.
This I think would be my biggest point of contention. They're not an automotive company. They're an AI software hardware company or like you could say a robotics company, but their first product happens to be a vehicle. I mean, the same technology that is powering the robot is the same technology that's in the cars right now. And you could argue that Tesla's making these cars to eventually train the FSD, because that's really that's really the goal here, is to start having software like margins, like licensing that technology out and putting it in smaller and smaller form factors, right? So fundamentally, if you think that they're a car company, then yes, a lot of what you're saying is going to make sense, because you're comparing them to thinking to yourself, what would Ford do, or what would Ford have to do, or GM have to do to reach these sort of multiples? But they're not. I mean, they're basically creating a computer on wheels. That's what their vehicles are. It looks like a car on the outside, but it's more than just a powertrain. And so that fundamental,
I think Steve's point is, until the revenue reflects what you just said, Carlos, that he can't give it the multiple.
Not the revenue, the profits. And I agree with everything you're saying, Carlos.
Say again?
I agree with everything you're saying about the company. And that's why I say that they're really a conglomerate, because they touch so many things.
Yeah, well, that's the second point. But the thing is, if you see them as an AI company, you understand that what the AI portion of the business is going to allow them to do is going to increase their profit margins and profitability tenfold in the future. So it's essentially like this multiple that you're saying is like what investors in the company see as call options on things that are over 75-80% likely to happen.
And from a software
based on projections.
Look, there is a path where they license out their FSD to other companies. There are a lot of different paths here for them to get more than 30% margins. That could definitely happen. And then I'll say that they deserve the tech multiple. And I'm not saying they're not going to get there. I'm just saying that today the revenue and profits don't show that. That's all.
Okay, let's get to the valuation, because we got to keep going. Yeah. Let's get to that.
So
20 minutes.
I put, if Tesla was 750 today, it would be a $2.35 trillion company. Okay, that's a little rich for my blood, considering that, and I know a lot of people don't like price to free cash flow. So I put price to EBITDA, because a lot of people go by EBITDA. And I would agree now on Tesla, because they're spending so much on CapEx building out the facilities. Price to free cash flow is probably not a good metric to use for their valuation. But even their price to EBITDA at 750 be 141x. Microsoft, which would be 93 billion more of a market cap, would trade at 24 times EBITDA. And that would be a current PE of 200. So like,
does any of your model take into account the next generation vehicle that is being built in Mexico?
So the DCF will.
Okay.
And we can play with those numbers live.
Okay, we haven't talked about that.
Well, why did you pick 750 though? You're just saying if it goes
just
there?
Arbitrarily.
No, just arbitrarily, because I've heard 750 and 1,000 thrown out as what.
That's what Warren said. That's what Warren said. He said it was fair value.
At 1,000, it's a bigger company than Apple today, and that would put their price to EBITDA at 188x, and they generate 22% of the revenue that Apple does. They generate 12% of the net income. It's just saying that this company, because of what they may do today, is worth Apple or Microsoft's valuation. It doesn't work. That's why.
Well, first of all, I agree with you. These two slides are useless, because yes, they shouldn't be trading at that anyway.
No way.
I agree with you anyway on that. But
all right. So share dilution, I put it in there, but I agree with their share dilution, because I'd rather them issue shares than take on debt. So very smart move on their part. They're not at the point of buying back shares, but you can see that they probably will, because their debt is so low. I mean, this is a company that did all the right things to grow. It's absolutely amazing.
That quarter that you said, Q2 2022, I think that's the moment when the company overall became equity positive, right? In initial capital invested equity positive. So that was the moment where they basically made all of the money back that was initially invested in the company, and the company itself turned positive. I think that's what so they have like almost zero debt.
Let me go live on the DCF so we can play with it, and then we'll have.
And actually, I have something. I have just a theory, not even a theory, but something to bring up, and it's sort of a statement and / question. Part of the problem with trying to value Tesla is the fact that you said they are a conglomerate, right? So, but each of the different industries have different PE ratios. So I'm looking up like Uber, for example. Uber is right now at a $90 billion market cap, but what's the PE of Uber? So when you're factoring in the robo-taxi side of it, I think we have to look at what the market is paying to Uber for that rideshare business. Then you look at Tesla and you can compare them, say, on the vehicle sales. But then you look at energy and you have to compare them, say, to a company like Enphase or SolarEdge. So then within the average, I would say, of that price to earnings multiple, that's where you could get the actual fair value market by weighing them based on how much profit each of those pieces of the ETF that makes up Tesla is to their bottom line. Does that make sense? I don't think you can have one.
It definitely makes sense because we all know that different markets have different price valuations assigned to it. Yeah. And Tesla is probably the hardest company to value because when you think about it, who would have thought, look, there's obviously people that would have thought it. Elon Musk did something nobody else could have done, in my opinion. He went after the auto manufacturers, underfunded, and with nothing, and ate their lunch. I mean, that just doesn't happen. So
that's sex with their wives.
They bought a lot of horses, right?
So, all right, let's pull up the DCF. Let's pull it up. This is the fun part.
Is it sharing? Yes, it is.
Yes, sir.
All
Can
right.
you zoom in a little bit from 100 to 125 on that on the Google sheet?
Or 150 for the people over 40 on this call?
125. We can see everything, right?
Okay.
125.
Just a little bit blurry.
I think Rango is trying to say what I said yesterday, that DCFs are total dog shit, but I would like to hear it.
No, but it's an interesting endeavor because I think
and there's no
so
one
hard to value
perfect way to value a company.
Exactly.
So
Okay.
we don't have to.
Also, if Tesla doesn't go to 3 trillion by 2025, if everyone says, then Steve's going to look like a genius. So I think there is value.
Well, I don't think anyone thinks it's going.
Who cares if it goes there by
Well,
2025
Warren
or
thinks
2030?
Warren thinks it should be 3 trillion right now.
We don't all
So, I
have
mean,
to agree with Warren and how bullish he is in
I
order
agree.
to understand that Tesla is going to do very well. We don't have to be
And
that.
look, as long as Tesla goes up, it's a good investment, and that's all that should matter.
If
It's
it beats
just
the
sort of
market and
roll
beats
it
the
down.
S&P at 10%, it's already a good investment. Okay.
Yeah. So
Yeah.
when you look at a DCF and you factor in perpetual growth rate, you factor in what you want your discount rate to be, and then what you think the average free cash flow rate is going to be, and then you account for how much cash is on the balance sheet in short term and long term, and what their total debt is, you can find the intrinsic value. Once again, this may not be the best way.
Mm-hmm.
And I would actually say we should probably use their net income instead of free cash flow for the simple fact that Tesla is not going to be spending this much CapEx every year. CapEx will probably come down in 2 years because their factory build out will probably be less expensive.
2025, I think they said that they're dead.
So I would be fine erasing this and bumping up the free cash flow to 11 billion to kind of mimic net income, because I do think that they should be given some benefit of the doubt. But if you believe the average free cash flow growth rate would be 25% going out to 2032, Tesla's intrinsic value is $163
today.
Now, if we change this to 11
So
billion,
hold on before you go on.
yes.
I was looking at that. And so the difference is you're writing 32%. That is not that overvalued for a growth company. Supposedly that's going to compound 50%.
No, and I actually think it may.
So
Depending on
32%
what you want the
overvalued
numbers to be,
is a great price.
look, I think Tesla's a little overvalued now. I don't think it's 50% overvalued like at some points because it has made tremendous progress. I don't agree with the current valuation now.
What do you think? What do you think is a current? What do you think is a good price for the current valuation?
You wrote $163.
Yeah,
Right
I
there.
think it depends what assumptions.
But
you're
that's
gonna
based on
make.
these assumptions. No, but I'm just saying, like whatever your own personal assumptions are, where do you say, you know what, this is where the company is fair value. This is where I would be a
Yeah,
buyer.
I would say
I
that
feel like
if
it's a fair
Tesla
deal.
went to 170, 175, I'd probably put my own money in, and not my wife putting her money in.
All right, let me
Or
ask you. It was at
Yeah.
170.
Yeah.
Where were you?
I was
Were you
buying
buying?
other stuff.
Well, there you go. Because
But
you thought it was
here-
overvalued at 170. Now
I
you're
thought that there was more upside in other
now
stuff.
it's at 250. You're doing a DCF to value it, and you're like, oh, I'd buy it at 170.
Yeah, around 170, that area, based on, like, I think that they could grow to generating 70 billion in future free cash flow in 2032. I don't think that's unreasonable by any means. But once again, that's still not as much as Apple or Google.
You see, but I have just a fundamental, like Apple is an infinitely easier company. Like it's easy to understand. They sell iPhones, and it's easy to calculate what they make on their software business. It's very simple revenue streams. Tesla has 5 or 6 different things that are all growing at different rates, trying to take market share in different aspects of energy that all have companies that specifically operate in each of those. And so when you try to project what their free cash flow is going to be, it's very hard to predict what that number is going to be, because you don't know what's contributing what to the bottom line every single year as we move through this curve. You know what I'm saying?
Yeah, definitely. And that's why, for me, as an investor, profits are the bottom line, because it doesn't matter what business you're in. $1 of revenue, $1 of profit equals $1 revenue, $1 profit. It doesn't matter if you're selling a car, SaaS software, or widgets.
It does
dollar
matter,
is
and it does matter.
But
the market values the dollar differently, by the way.
The
Because
market values it differently.
Well,
and
that's where you get your multiple.
That's all that counts, buddy, is the market.
What counts is what you're bringing in. That's what counts.
No. You keep saying that counts as what you're bringing in. Look, I agree with you. Revenue matters. But the thing is, if your revenue is growing faster than another company, B, the dollar is different. It's considered different.
The dollar is different depending on what
it's
you're
rated differently. People are willing to pay crazy multiples.
Differently, that doesn't mean that it is a right valuation for all investors. Because
that's true.
Every investment that 100%. You're making, you're paying the present value for all future cash flows. So it's figuring out how much cash the company is going to generate over time, and then making assumptions if companies are going to retain earnings, to grow their profit centers, to increase earnings over years.
So, what's a fair PE in your opinion? Is it 20?
No, no. Look, this is Tesla.
I'm just curious. What are we getting at? What is the fair PE here?
I don't know.
It has to be something. You must have an opinion on this if you saw it.
Well, what was the PE at 170? Why don't we start there?
Yeah, I also want to point out, it's Chris's job to just troll the chat when he's not here. Is that his actual official job? So from now on, as a finance junkie, when I'm not on the pod,
you got to get drunk and
I will get drunk and troll the chat. All right, but go ahead.
I don't think a crazy PE for Tesla right now is between 40 and 45.
What is it? 20 and I'm sorry?
40 and 45.
45.
Oh, that's the fair PE, 40 and 45.
That's my look. When I say these numbers,
okay, no, but what you're saying is, so it's actually 15% overvalued in your
like right now. The current PE is 64. I don't think they're a 20 or 25 or a 30 PE company because they are growing fast.
PE 71.
They have a lot of catalysts.
Well, I the reason we talked about this, the reason it pumped is because look, when everybody started adopting NACS, everybody basically said Elon is winning, and that made the market move the stock. So I think most people agree on that point now. So that's a fundamental change that people are saying Tesla is winning, Elon is winning, this is happening. That's why they're valuing it more, maybe currently, right?
And look,
is that fair to do that though? Is that fair to if Elon is winning?
Next year, this could look cheap based on what occurs over the next year. 12 months is a long time for what Elon's doing.
But this is my point, right? The supercharging network can be likened to ExxonMobil. They are providing just the fuel for the vehicles. If next year vehicle margins compress or sales drop, but the supercharger overperforms, so they have the same, basically it's Vitali's point. If their gross profit is the same, right, but a greater majority of that comes from supercharging versus vehicle sales, the market's not going to like that. So it does matter how those dollars come in, is what I'm saying. Because if for example, you have the guys like Gary Black, right, where they're saying, no, we need to see vehicle growth. We want to see margins. We want to see margins expand. We want to see X, Y, and Z. If that doesn't happen, the market's going to respond negatively to that. This is one of the reasons why it's so volatile, because different people are bullish and bearish on Tesla for different reasons, and they're all kind of pushing and pulling at the stock. Whereas if the supercharger network or for example, let's say that 2024 they released the full version of FSD, the people that see Tesla as an AI company, right, are going to value that a certain way, versus they might not care about what the gross margins are on a car. This is why I think it's so hard to, specifically Tesla. I'm not saying you can't do something like this, a simple model for something like Meta or for something like Amazon, where it's they have sales and then they have AWS. It's a simple business model. But Tesla is it's an ETF unto itself. It'd be like you trying to do a DCF on an ETF with all the different companies and factor in all of them.
Well, the thing is,
at the value of the ETF.
No one's ever going to price in everything Tesla is doing, because it's even hard to price what everything GE is doing, and they never price correctly. So I think that's actually very difficult. And to Steve's point, I actually agree with him. Look, the stock is volatile. It can easily drop to a 40 PE in the next week or two. That doesn't mean, though, like the only thing I'm fighting for is not the actual current price and the current PE. I'm fighting for that the story, you're trying to price it in this model this year when the guy told you it's growing 50% compounded, not counting any of his other businesses that he's scaling up. Okay. He's not talking even about the other businesses, how fast they're going to grow. He's talking about just the car business and the energy business growing. Yeah. Actually, the energy grew, I think, 80% last year. So my point is, if you start compounding these numbers out and you take the current revenue and then you look out, what, 2 years, 3 years, the revenue doubles, triples. So this is why people are pricing it higher. This is
right here is why they're pricing it higher, because the intrinsic value could be huge if it grows at this rate. Because that's the average of the past 3 years.
So you're not paying today's prices because you think it's expensive today. Isn't that a big value investor fallacy that you're sort of stuck in?
Look, if you think that Tesla can grow at 50% free cash flow growth rate, a DCF model gets it to $854 fair value. Because
when 2030.
Well, it would be now because you're paying the present value for all future cash flow.
Oh, now
because in 2032, it's going to generate $436 billion of free cash flow if it continues to grow at 50% over the next decade.
Okay, so you're saying that's not going to happen. That's right? Is this what you're saying?
I'm saying that as an investor, I don't think that's going to happen. But
okay, so
nobody knows what the future is going to be.
No. But let's actually do this. Let's put some numbers in. Is it growing at 30%? You think? Is
it
growing
at
35%?
The intrinsic
value. Well, that would put it at 244.
No. So what do you think it's growing at? Right.
At 30, it's 229. When you start getting over 30, it gets very interesting.
Okay, so basically they have to stay over 30%, which I don't think that's going to be a real challenge.
I don't think that's a real problem. I mean,
we're at 5% penetration.
He's right. He's projecting 50, and in these market conditions, right, with rates, and he said all of this before we had the war in Ukraine and all. And it's still the miss that they were so heavily punished for was, what was it, like 47% growth?
No. It was the gross margin that dropped to under 20. That was why they were
the gross
punished.
margin. But I'm saying that the year-over-year compounded growth, it was a 3% or something miss. That was the first thing, and then the sale of Tesla stock for Twitter. That's why it went to $100.
Yeah,
that was it.
And by your own DCF, by the way, at $100, it was completely undervalued. Why didn't you buy?
Well, he said he was.
I was buying other things.
There was no better deal. Okay, there was no.
I was buying Palantir. I was buying SoFi.
Yeah, that's his right. That's right.
So that's his did pretty well on all.
Well, but let me go in a little bit here, Steve. To be fair, like Tesla's a once in a generational company, so it not being at 100 that's a pretty bad miss for me as well. But for you, like. If you understand valuations much better than I do, that's a bad one to miss. Like, what else could you be buying? What else could you be buying that's so much better than
that? Would have made 100.
But your own DCF,
150% return.
Hold on, forget about 150%. This guy would have 10x'd his money because his DCF shows if he would have bought options at $100.
Oh yeah.
It's trading at 250 when it was tanking.
Options, yes.
This guy would have 10x. He would have made $1 million in the last couple of months if you believed in the story.
And that's the biggest thing. I don't necessarily believe that these rates are going to stay like this. Over the past 3 years, we've seen it go from 178% growth, 51%. Phenomenal numbers. I just have a hard time seeing that they're going to stay 30% and above on free cash flow.
Did you do this DCF, or did you run these numbers and value the company when it was around $100, or did you just do this? Okay,
I did this for this podcast.
Right. Okay, so that's the thing, Vitaly. He didn't run these numbers. It wasn't like he was aware of this at the time. He wasn't.
But honestly, even if I did run this model, you'd
have bought Palantir instead.
There's a halfway good chance I would have bought Palantir instead. Yes.
Wow.
There definitely is.
Palantir did well.
Palantir has done well. Are they growing 50%?
Tesla's done very well, and for me, I just don't see the rates keeping up with this. But I could be 100% wrong. I've said that from the beginning. I'm not bearish on the company, not bearish on the long-term prospects. I don't like the current valuation. I think it's going to come down a little bit, but for me, there's better investments. I'll say it here, I've said it other places. I think SoFi and Palantir are going to generate more capital for me than Tesla would. So I put money into those. That's a personal opinion. I could be 100% wrong, and only time will tell.
First of all, I think you could be right. That's not the point. Okay.
Because
People don't buy Apple because it's 100%. It's a 10xer for them. Okay. They don't do that. They buy it because they know they're going to compound at 20% or whatever. And they feel comfortable doing that and putting millions of dollars into it. That's why you put something into Tesla now, because it's now a compounder. Even if
you want me to close the screen, or do you want to put it?
No. But even your DCF, I keep going back to this. You put 35% right now. I don't know if people saw this, but your 35% projection. Wait, you just lost it. I was showing it. Your 35% projection shows that intrinsic value is 322. Yep. Okay, it's 33% undervalued.
It would be a great investment right now.
But is that 322 intrinsic value today?
Yes, that's today. That's the way these DCFs work. They roll back.
Yeah, so the way that it works is on the discount rate. I'm assuming 10%.
So can you put 20%? What is let's say
what is the percent what is the percent growth rate to get to the value that we have now?
Today's current. I just am curious.
Intrinsic value. I would say you'd have to be at like 25% to get that intrinsic value to 250, which is what it is today. It closed at 240 something today, 241.
No, so that's 29.
Okay, so 30%.
Okay, 31, around 30%. Okay.
So 30 and a half, 37.5.
So that here's a question. Well, I have a question for him. Let's say, this year might be tough. I don't know what's going to happen, but let's say next year, 2024, it starts. They're growing over 30%, whatever that is. Okay. Do you start to believe the story, or do you still stick to the same mantra that it's going to go down to 20 and 15?
So here's the thing. It's not that I don't believe the story. I think Tesla's going to appreciate in value. I just don't think the current valuation is justified by what they are generating in profits. That could all change, and my belief could change next quarter, could change in 3 quarters from now. I'm looking at things from a profitability, from a margin, and what I think their rate could be.
But don't you see it'll be overvalued again, because other people will see that too, and then it'll still stay overvalued. So like great companies stay overvalued for longer than you can try chasing them. You know what I mean?
They certainly do.
The other thing about it is it's very rare when you have a very clear legislative path, like something like the IRA and the administration has said in California, by 2035, you cannot have any ICE vehicles. So you just can't sell them, right? So you could, let's just say as California goes, the rest of the country goes. So by 2035, you're not going to be able to buy an ICE vehicle. That's just let's just make that assumption. Who's going to make all these cars if it's not Tesla? And GM can only make 2 Hummers in a year, and they can't make a profitable Mach-E. And you know what I'm saying? Like, who's going to make all these cars? Toyota doesn't even believe that EVs are a thing. They don't even want to make BEVs. They want to sell you on hydrogen. So, like, who's going to make all the cars that are going to sell in the United States if it's not Tesla? Assuming you can't get any by 2035.
By the way,
we have to get there. We have to get there because the U.S. market is huge for vehicles. Like, who's going to make all the pickups? Ford cannot make enough F-150s, and that's the #1 selling vehicle, right? In the United States. Who's going to make all these vehicles?
Well, they're ramping. Everyone's going to ramp. That's I don't know if that's an actual issue.
But then what you're saying is then the price, if no one can make enough of these vehicles, the price of an F-150 is going to be $200,000 because of demand. There won't be enough vehicles to go around.
Well, no. I don't think Ford's. I don't think Ford's that dumb. They're just going to.
You know what I'm saying?
Kill the market for themselves. That's over with. The $200,000 vehicle is done. Okay, everyone's going to ramp. It's going to take a couple of years. Ford is going to ramp. GM is starting to ramp, or at least starting their Ram truck or whatever that was just announced.
The Ram, the Silverado. I get it, but I'm saying it's still not. Even if give them the best possible ramping scenario, it's still not going to. They're not going to be able to make as many EVs, and even supply chain cannot support the amount of
it's going to take them a while to get to Tesla level.
So my question is, Steve, who's making all these vehicles if it's not Tesla? Someone's got to be making most of these vehicles, and if it's not Tesla, then there's another company we're not looking at whose growth is going to be massive that we're not looking at. What's your point, Chris?
Chris has no point. Believe me.
I mean, so what's the point? They're at an all-time low because they're being valued based on people that say bought it when it was higher, and there's also a bunch of incentives now. Why would you buy a used Tesla when you can get a new vehicle with a tax break?
I do want to point out, first of all,
that's the point.
This year or next year, I'm not saying any one year that Tesla's going to be growing 50%. I think Elon has made it clear that this is just the average that it'll grow. Some years it was growing more than 50%, the last couple, right? Then it dropped to 40%, and everyone going crazy. I think after the interest rate problem is over, we pause and we start to lower. Don't you think it accelerates again into EVs and solar and energy?
When cost of capital comes down,
yep,
I do think that you're going to see a pickup in car sales and a pickup in solar. I think it would be crazy for anybody to assume that that's not going to happen, because when interest rates come down, cost of financing drops. More people are going to be enticed to make purchases, and people could even be holding off right now. I just don't think this is a zero-sum game. I don't think that EV is going to get the adoption over the next couple of years that some people think it's going to. And I think it's going to take longer to electrify everything.
I agree with you there.
I just to bring up some things, that this is why I wish Warren was here, because he had a different way of valuing Tesla that was based on, he looked at the amount of like battery power that they produce in a year.
Kilowatt hours they produce.
The kilowatt hour that they produce in a year, regardless of the vehicle that they put it in, regardless if it goes into a mega pack or a Powerwall, and then how much profit that they make. And then saying with their current supply chain and their projections for how much they're going to be able to produce, how many batteries or how much power they're going to be able to produce by 2030, his valuation, if he said, what did he say it was? If you take a Model 3 and you take its battery pack size divided by the profit on the vehicle, and then you scale that up to what they say they're going to produce in 2030, it's like, what it would say, it's like a $7 trillion company. And that's just because of how much money they're making per like kilowatt hour of energy that they produce, regardless of whether it goes in a vehicle or stationary storage. I think I'm asking you this, don't you think that's a better way to value a company like this?
I think it's hard, because if you look at, and I know you don't like taking different companies, but
no, this is good to compare.
The market has given Apple a $3 trillion valuation 2 times.
Yeah.
Last year they generated either 98 billion or 101 billion pure profit. So we already know that the market is assigning a valuation based on a company hitting $100 billion net income, not gross profit, net income. Google and Microsoft are both in the 60 and 70 billion range. Google is 1.6 trillion, Microsoft's like 2.4 trillion. So we're seeing framework for what those valuations could be. Mm-hmm. The problem that I have is I don't necessarily see Tesla generating $200 billion of net income in 2030. And that's where my assessments on numbers vary from other people, because I think it's very hard to go from 12 billion, which they're generating in the TTM, to 200 billion by 2030. Like, okay. That's a huge.
Can I ask you this? Do you know what it was in 2018?
What their net income?
Oh, it was nothing. Bring up that great chart from.
My point is,
it was negative.
Things change very fast.
Yeah, probably
okay. Yeah. The only reason they shot up is because no one was expecting them to make any money ever.
The other thing to consider too is part of the reason, I think there's 3 million Teslas on the road. Someone fact check me in the chat. I think there's about 3 million total vehicles on the road. Yeah. Part of the reason Elon compressed margins over the last couple of quarters is to get more vehicles on the road, assuming that you're going to be able to monetize them in the future.
It's smart.
Right. So as FSD gets better and better, and we're trying to get to this March of Nines and make it more perfect, right? He tweeted that he's going to offer very soon a 1-month trial to every Tesla. So in at some point, say this year, every single Tesla is going to have FSD available. Right now, I think they have 400,000 people. So that's a relatively small percentage. What is that? That's like 1/6 of the fleet, roughly, right? So now they're going to 6x the number of people that have access to FSD for a month. If you don't want to pay the $15,000, you can pay $199 per month. How many of those people do you think switch over that start paying Tesla $200 a month? That's basically free money.
And that's one of the biggest bull cases and things that can go right, because incremental revenue is key, because it's reoccurring.
And it's software margins. It's nothing. You turn on a button and it's there.
It could be SaaS-like profit margins. Mm-hmm. And that's part of the bull case that I agree with. I just don't see FSD. Look, I work in New York City. I walked around Midtown today to go to the post office, and I just have a hard time seeing FSD being regulated in somewhere like Manhattan.
There's a guy you should follow on Twitter. This guy called Strength Plan. He is basically the whole Mars catalog of the East Coast. All he does is drive in New York City.
What's the name?
Strength Plan. Can you bring him up on Twitter? He might actually watch the channel.
What is it? Strength Plan?
Strength Plan. Yeah, he's like an Asian guy,
Okay.
and all he does is he's drive in New York City with FSD, and he's got basically the same like the whole Mars catalog videos, and it's just that all day. He's on the LIE, he's on the Van Wyck, he's in the Long Island
While he
Express.
brings that up, do you mind sharing how much Tesla your wife
Yeah,
has?
yeah,
Because
I
she's
was
the only
waiting
one who's
for-
going to be rich.
I was waiting for Carlos to finish. They lost $978
Okay,
billion
and
in 2018.
shh.
So their
Wow.
ramp's been huge. There's no question about that. But
I'm gonna
once
try to
again,
look him up.
it's easier to go from 1 billion to 2 billion in profit than
Well, when
2
did your wife
billion
buy
to 4
Tesla?
billion.
I'm curious. When did your wife buy Tesla?
When?
At what price?
Oh, pre-split, I think.
Okay, good. Well, with both splits.
I don't think 2 splits ago. I think pre-split, last split. I don't look at her account much, but
Right.
she's
Yeah,
been a
Probably
Tesla
has
holder
more money.
for I want to say 2 years
There he is,
maybe.
Amit. Hey, look right here. His first tweet, April 28th. Tesla.
Carlos, you're gonna have to share it because my Wi-Fi is really bad, so you're gonna have to share the screen.
Okay. Let me just do this. Okay, I'm gonna share this. You can just see. Present. Share screen. It is this one. Can you guys see?
Yes.
Can you see? All right. So this is him in New York. Can you hear the audio? by any
Can you
chance?
make it bigger?
Yeah. So this is him in New York City, FSD. And this video is, what is this? Well, this is a mini video, and all he does is post videos. This is New York. This is in Carroll Gardens with bus stops. And he's explaining.
Yes.
So his whole feed is videos like this. His whole feed is videos of him in and around New York City driving. Anyway, so he's a great guy to follow. In other words, there is a community there. This information is out there.
Can I ask
But
you, Steve? Do you drive at all?
Do I drive? I drive into the city every day. I go to the office.
Okay.
Are
Here's
you
a
in-
question. Here's a question. So if you had to pay $100 for FSD, forget about 200 for a second, because we talked about this yesterday. Would
Right,
you pay
100%.
$100 just for the highway drive so you can sleep in your car?
I am the wrong person to ask
I'm
that.
asking you. Just a question. You could say no.
Yeah, no, of course. But
No, of
I
course,
may
what?
Be,
Yes, of course. No.
of course,
yes.
yes.
So you would pay the $100 to
But
Elon.
I may be in a different point of
No.
my life than
No,
other
you're
people.
not. Everybody doesn't want to spend an hour in the
No,
car
but-
yelling at everybody else. They'd rather sleep or read a book.
Right, but I'm in a position where I can do it and it doesn't hurt. That's what I'm getting at. Like for me, $100 a month, sure, it's not a big deal. But other people, I don't know. But yes, that price point.
Anyone buying a Tesla will easily afford the $100, by the way, a month.
There's a good chance of it. And look,
Let me ask a question. Let me ask a question. Steve, what if you are totally wrong on this and Tesla does triple by 2025, even if the market's just being irrational? Don't you think it's worth still buying at 240, 250, just given all the growth prospects that are there? Or are you so stubborn on the valuation that there's no way you could ever buy at this point?
What year did you say? 2025 or 2026?
Could be 2026.
2026. I mean, the point is 2-3 years from now, it goes to 800, $1,000.
So anybody who thinks that Tesla is going to 2 or 3x in that time should really do their due diligence. And if they think that's going to happen, it's a great investment. For me, I think the path for 2 other companies is more probable based on the due diligence I have done than Tesla. I could be 100% wrong.
Which companies? Are you saying the same space competitors or just
No. For me, when I'm allocating money, I think that Palantir and SoFi can easily do that by 2026. I think they have an easier time doing that than Tesla. And for me, it's a zero-sum game. It's where do I think on the growth side of my portfolio is my money going to grow the quickest?
Well, isn't that a function of just the smaller market cap? Like what's SoFi, $5 billion?
Yeah, but regardless, I don't have an infinite amount of money to invest. I'm not Warren Buffett.
Why?
So if I have to pick my spot on the growth side because I have X amount of money allocated to growth companies, I got to look at where I think I'm going to get the most bang for the buck. And right now, today, based on everything that I see, my due diligence is showing that I think I have a better chance at a larger ROI on SoFi and Palantir. And I'm not saying Tesla can't do that. I'm just saying I think it's more probable for Palantir to get to a 60 or 70 billion market cap than Tesla getting to a 1.8 or 2.2 trillion. That's all I'm saying.
Okay, what I find interesting, or My pushback would be, if Tesla does not reach these multiples, right? If Tesla does not get there, then what's happened? Because they are involved in almost every aspect of this shift away from oil. Then that means the shift away from oil, the EV revolution, is not happening. That's my thinking. It's not happening if they don't get to those multiples, because they're sort of leading the charge in almost all of those aspects. Even if they're not the number one player, even if they're not the number one player in solar, if they're not making money on solar by 2026, the industry is not doing well. And so then you have to say to yourself that it was a failed run, right? With all of Biden's incentives, with all this stuff, all that stuff, all the EV mandates, none of it worked.
So let's talk about the solar thing for a moment. So when you're thinking about solar, I think, Vitaly, you have solar, right?
We both do.
You both do. Okay.
Yeah.
So average kilowatt hours per home is about 12,000 for an average home. Is that an accurate statement?
It makes sense.
How much do they use? What are you saying? How much do we?
No, just the average amount of kilowatt hours an average home uses a year is about 12,000 kilowatt hours.
The usage per year? I don't know about usage. But
No. A day is 12,000.
No, but you would need a system at 12,000 kilowatt hours for it to be
12 kilowatt. It would be 12 kilowatt hours.
Okay. So how much does a system cost to get you to net neutral before incentives? I feel like it was in the 30,000 range last time.
Okay, so every house is different. I can give you my specific example. Carlos,
I don't want to know specific numbers unless you're okay saying.
I'm okay with it. I've said it before.
Okay.
So I got an 18.5 kilowatt hour system that can produce that.
Okay.
I paid 45 grand. So I got a loan. 30% was tax credit, by the way. So that takes off like 14,000,
gone.
Which means, you get back basically 30%.
What was your out-of-pocket cost?
Yeah, what was your out-of-pocket for the loan?
I'm getting to the beautiful part. It's $0. Okay, that's what I'm trying to lead to. So minus so it's around, let's say, 30 grand. The loan, the final loan has to be 30 grand. Okay, not the 45 because Uncle Sam is giving 30% tax credit. Okay.
Okay. So you got 10 grand in tax credit. You're at 35,000.
Around 14,000 in tax credits. Okay. And then there's something called an SREC and a TREC. So my loan is $350 a month for like a 30,000 and change somewhere. I forgot exact number, but 30,000 and change, $350 a month. I get tax credits, something called an SREC. They do TRECs now. They basically are between $200 and $400 a month. So at the end of the year, it's a net zero. I've never paid $1 for solar. I never paid $1 for my energy.
Is that a New Jersey thing?
That's a 13 state thing that does these things, and people ignore the actual incentives all the time. And I try to explain it to everybody. And as soon as I say $45,000, my brain shuts down and goes away.
No. But that's
wait. But the other part of it is he's also charging his vehicle.
No, I get that.
He's got two Teslas that are being charged on the system.
I do want to make it clear that now there's overages because now I put more vehicles. I put a heat pump. Now I do have to pay a little bit of electricity because now I have a bigger usage. But basically, my system when I originally got it got me to zero. I didn't pay anything. $0 for electricity. I got my TRECs and SRECs. That everything was covered basically. So I had like no cost until I started buying electric vehicles and heat pumps and started to make more use. And even now, I'm saving tens of thousands because now I don't use oil. So whatever, that's a whole different discussion. Nobody understands this because it's really hard for them to wrap around their head around $45,000 because I've told my neighbors that this is 45 grand, but you're not actually going to pay it. This is why. They're like, oh my God, I can't afford this right now. I said it's $0. I said, I can't afford this right now is what I can.
And you just did a better job of explaining the tax credits than probably any salesperson has. And when you live in one of those states,
that's
makes sense to get solar.
That's the but think about it. Like, okay, I live in California. I get infinitely more sun than in New York. Like New York doesn't get the same amount of sun, and that's still what he's able to produce. In California, they allow you to install a system that is 107% of the last 3 bills that you have, right? So you can only, like, in other words, I can't just put as much solar as I want
and then sell it back to the grid
and sell it back to them. They don't want everyone doing that, right? So I had a specific usage for the 3 months. I got sick of a bill in August, and I put in a system that was 9.6 kilowatts, cost me $26,000. Okay, and then until I got an EV, I also had zero bill. which means I generated enough power in July, May, June, July, August, that it covered me for all of November, December, January, February, March, right? Until it came back around. It wasn't until I got an EV that I started to hit that. Now I have a Tesla Model X Plaid, which pulls 100 kilowatt hours. That's the battery, just the battery, not to charge that back. And my wife's Model Y, which is 75 kilowatt hours. I also have electric water heater. My heat is still gas, but I have an electric water heater, right? So I am now also drawing some power because I'm overusing what the system was spec'd out for. But if I do the math on it, I mean, I think I even did it in the Discord. I have it. If you remember our Discord on the Enphase channel, I think total what I'm out of pocket a month is like $100. That's for all of the hot water, all of the electricity in my house. That's including my air conditioners, my computer systems, and the EV charging of both of the cars.
And did you get the same credits as Mr. Axl Rose?
Yeah, you do. You do get credits out here. It's a little bit different because in California they have something called time of use, which actually benefits you because you get you pay a different rate based on the time of day that you're consuming. So at night after 8 p.m. is the lowest rate. That's when they say charge your vehicle at night after 8, when the rate is like 13 cents a kilowatt hour. And then if I want to, in the day, if you're using your AC, like during peak time, in order to de-incentivize people, they charge you more during the day.
I mean,
but what does that, but what does that mean? That means if I'm not using my AC during the day and my panels are sending power back during peak, I'm actually making that profit instead of paying it. I'm getting paid more money if I send them power when it's high peak. And then to another point, Chris lives in Atlanta, and he was looking up what a solar system would be. Wasn't looking up. It's 1 cent a kilowatt hour is what it would be. They'd be charging him to charge an EV. We calculated it, right? Wouldn't it cost him like $3?
Yeah, but that means he doesn't need to get solar. The grid is charging him only 1 cent.
So cheap.
The power is super cheap there, so it might not be worth to get solar in that state. Who knows?
So,
let's bring it back to Tesla though, at least to finish this up. You were talking about energy, so where is this all going? So did you have a point in terms of the energy business?
Yeah, I was interested because I know the two of you have solar, and on the energy side, if more people understood those tax credits, because look, when people hear that, all right, after the rebates, I got 31,000 nut. If I put that in the market at an 8.5% return, I may do better instead of having to have a break-even point of 8.6 years. So people do that type of analysis. And I think if people understood the credits better, from the way that you explained it, it definitely makes sense if you're in one of the 13 states to go right ahead with solar, because if you can eliminate those bills and get the tax credits at the end of the year to offset everything, it definitely makes sense. Now,
plus the increase in equity of your home.
Well, we forgot. I mean, Carlos mentioned it, but don't forget, when I charge an EV, it's like $8 to fill up a gas tank. The fact that I don't have the gas guzzler paying $100 a week that I used to drive, because I drive far, and now it's more like $15 or something like that.
It's more economical.
I mean, there's so many benefits that we need a whole episode to go into that it's crazy. But to explain this all to a person who's just hearing it for the first time, and the large price tag, and they want to shut down immediately.
No, I think you guys should do an episode of that. So to Carlos's point, solar is not going to be a zero-sum game, but solar is going to be the quickest. And I showed this graph last time. It's going to be the quickest growing energy source over the next 3 decades. And it's not going to eradicate, but it is going to displace some fossil fuel consumption.
So you have Enphase. You bought that today.
So I didn't look at Enphase. What's it at?
Talk about that one too.
I was very interested. Look, you guys saw the article I wrote on Enphase. I'm very interested in Enphase. I think they have a huge runway.
Yeah, you should put that. I want to check it out.
Can you post that again?
Yeah, post the link
in the
to
chat.
The Enphase.
Yeah, I'll find it and I'll post the link. But yeah, Enphase, based on the energy stuff that I looked at, unbelievable growth.
So in your model, though, did you account for the whole Elon business of energy, like
arbitrage?
Growing more? Say it again.
Energy arbitrage?
Well, no. But basically, Elon selling, besides solar, selling mega packs, doing grid scale storage. Like, is that all accounted for in your model? I didn't ask you that.
There's not enough information for me to come to some type of framework about what those profit margins and how much they can sell of it. I think for me, the way that I look at it, I'm always going to be behind the curve on a company like Tesla, because it's very hard for me to pay 45 times EBITDA or 130 times free cash flow.
Can I ask you a question?
Yeah,
What happens? What happens, or how do you model if, say, GM goes bankrupt or Toyota?
That's a good point, because if those companies go bankrupt,
Where does that money go?
Somebody's got to pick up the capacity.
What is it?
If they go bankrupt, somebody's got to pick up the capacity. There's no question about that.
Yeah, but also just the optics of it. It's the same reason why just even having Rivian adopt the NACS, like the Tesla becoming the standard, right? Just even the optics of that, even though no money's been made, you see what it did to the stock price. What happens if these companies start to have real problems? What happens when Lucid goes under? Lucid was supposed to be the Tesla.
I don't think Lucid's a real player, though.
I don't think that matters. But
but I'm saying, as Lucid goes under, as Polestar goes under, as Nikola finally goes under, Toyota has problems, GM
and
has
FUV
problems.
is gone.
Right,
Finally.
or FUV. Like, as these companies go down, and you start to see that there's just really only one player that keeps coming up to the top, right? As FSD starts to get more widely adopted, like, it's these small little incremental moves. And
I think Swimmer Shark says it right. It's China and Tesla's world. That is exactly right.
Yeah, that sounds like a Dan Ives
post in the comments.
Everyone else is just paying rent.
But I threw the Enphase article in the private chat. If you guys want to throw it in the
yeah, can you post his link, so I do want to read his article later.
Yeah, no, I would. And anyone who's not following Steve, you should follow him on Twitter and follow him. He's a smart guy, knows what he's talking about. And I enjoy these conversations. I enjoy going back and forth. It does, honestly, it just reinforces my thesis. And it tells me, it shows me how early we are, because the thing is, you make a lot of points, you make a lot of good points, and I can't disagree with any one particular point, but from where I'm sitting, it just looks completely differently. And it's like, dude, I don't know what metric I can give you to be like, you are missing out on such a massive opportunity. It's like I've shaken a mitt sometimes.
The thing is, hold on, you don't have to miss out on the opportunity, because your own DCF says if it drops $200, you're supposed to be buying it. So I hope you get some price that you want, because look, it's a volatile stock. I don't care if it drops 30%. That means nothing. Okay. When you're in it for 5 years, 30% drops don't mean anything.
You just hit the nail on the head.
Yeah.
You just hit the nail on the head. If you're a long-term investor and you're not an assassin like one of our buddies, then price fluctuations should not matter. And if you have long-term conviction, you should be buying dips. For me, this is not a good entry point. Maybe a good entry point for other people. If it comes down to a certain level, I would probably start buying.
Do you implement any strategies like a cash secured puts on the specific?
I do all of that, cash secured puts, and that's something I would consider doing on Tesla to force me to buy shares.
What price would you set them at?
It depends on the premium, but let's bring up an option chain.
And I do want to point out, Chris Patel is right about all these Indians in America. If you want to share,
my dream when I'm like 35 or 40 is to have a chain of Dunkin' Donuts across New Jersey. Like that is
that's my dream too.
So we can start it together eventually.
Listen,
Indian and Russian as we do it.
You'll make more money from the superchargers.
I've never seen an empty Dunkin' Donuts. Have you?
Me either. No, I'm there. I just noticed today I should get the Dunkin' Donuts app because I go there so much. I should get the
I use it all the time. Absolutely. And I've never seen it empty. I'm never the only person in a Dunkin' Donuts.
I mean, if you go kind of late to the one on West 3rd Street.
Is this like 3 a.m.?
West 3rd Street and Avenue O, and I know that one really well.
Now, Carlos, you're in California. That's different. You guys drink Starbucks. And in New Jersey?
But believe it or not,
have you ever seen a McDonald's empty? I've never seen a McDonald's empty.
There's one Dunkin' Donuts out here.
What date on the chain do you want to do?
Actually, I was looking at Tesla options the other day, and Warren brought up a good point about it. Now, since the split, stocks become even more volatile because of margin buying and because of now options are more affordable, and so any movements on the up or down are going to be more. I was looking at leaps. I was looking at $300 2025 leaps. That's what I was looking at the other day.
So, Carlos, what month do you want to go to? Just give me a month.
January 2025.
January 2025.
Yeah, as far out as you can go. I was looking at those, and I was looking at $300 leap, saying, I just want to have one in my pocket. I just want to have one. And so I'm either going to do that, or I'm going to listen to Amit and buy some hood call options, which I was looking at this morning too.
Hood is,
they announced they announced
cheap, dude.
They announced 7% layoffs today, so they're getting ready for gap profitability. They're leaning out even more.
That's good. I liked that too. And I was looking at Enphase today, but Enphase was just like, like Hodor, like it would
That
not go
piece
down.
of shit.
It would not go down, man. I was like, okay, I'm just gonna wait. I'll fight another day.
Shit.
All right, so $300.
And to answer the questions in the chat, I've seen it. Yes, I did buy today. If you were on our Discord and our Patreon, you would see exactly what I bought. So come on and join. It's $5.
Can you put up links for that, Amit? The Discord and the Patreon.
It's $5 to make fun of my trades.
So Carlos, you're
Talk
at
shit.
$5,800 for that leap.
It's not bad, actually.
We'd have to look at the option profit calculator to see what the profit would be, but yeah, that could be something that could be interesting depending on
5,800. Okay, but that's
what
the,
it would
that's the
be.
bid. Wait, is that the bid? Oh no, that was the last price that it was sold.
The
bid was
bid's 57.
Right. Okay. Yeah, it's not too bad actually for 100 shares of Tesla.
Well, look. I want to go back to what I said earlier. I think currently it's a little too expensive. Okay, because it pumped because of the NACS adapter, and I think there should be a pullback. First of all, even great companies have pullbacks. It's okay. So once it becomes a little bit cheaper, that's when Carlos, the option play should, you should think about it then.
That's one of the reasons I didn't like pull the trigger on it, but I'm looking at it, and it forced me to think about what price I think it will definitely be higher than by that time. Because if I'm paying $57, I'm saying Tesla's going to be over $357 by January 2025. And that's a lot of conviction. It's only $5,000, but it's still a lot of conviction that's going to hit that versus just buying $5,000 worth of the shares,
I think the mistake we made, both of us, that at 100, instead of buying shares, I probably should have bought the options.
Should have just bought it.
So I was buying shares, but did not buy the options. Silly me. I'm not going to make that mistake again, especially with Enphase as it tanks.
Yep.
So Carlos, to answer your question, I am looking at the option chain after doing all the numbers that I look at.
Mm-hmm.
I wouldn't be opposed to writing a cash secured put.
I like this man.
Okay, all
right.
He
likes making money.
Hold on. At around the 155 level, because when you do that, that is paying you $330 on 15,500. That is
how many contracts?
I'm not going to say how many, but you're getting paid 2.13% interest on your money over the next 4.5 months.
What if you just put to 2025? How much would they pay you right now for that 150?
Well, that's going to be way higher than that $3. Because what are these?
This is what I'm saying. Because
so the January
trying to
time some short-term thing.
Exactly.
Over 2 years, I am pretty confident it's not going to be at $150.
It's really tough if you're trying to guess what Tesla's stock price is going to be.
Yeah. So right now the put is at 150. It's at 1580.
Can you make it bigger? Make it like Command Plus a couple times just to make the text bigger.
And so as it drops, and let's say it goes to the 200 level or lower, 170, 180, whatever, selling some of these contracts seems not a terrible idea. And then using that money actually to buy some calls for the future.
Yeah, I mean, look
at that one.
This is not
look at the
financial advice by any means. I don't know anybody.
This is only for us. I'm not talking to these guys in the chat. I don't know what their situation is, but I know, Steve, you got some capital. You can definitely.
Yeah, I don't know what anybody's situation is, but on this particular chain, okay, you would get paid on the $150 put $1,580 for locking up $15,000 for the next 1.5 to 2 years.
Mm-hmm.
So you got to ask yourself, that is 10.53%. Question becomes, do you think you're going to make more locking it up on that and generating that amount up front, or throwing in an S&P fund or something else over that time? Now you can always sell out of it, but when I look at it and
you win if Tesla's $165.67. You won.
Yeah, because it expires worthless and you keep the premium and get your cash back.
Yeah, but what I'm saying is that Tesla's a volatile stock. You wait till it's under the $200. You do the same thing. Your percent goes up. That cash can be converted to now paying for your long call, which is like a free call option on the future.
Yeah,
Tesla does escape, and then you have worst case is you get shares under $150.
Yeah, so if you have the capital to play with, you could certainly write these cash secured puts, hoping they expire worthless, and being okay locking that money up and taking the premium in buying shorter dated or long dated calls and get it for free.
Yep.
Essentially, because I got to assume you would not be sad buying shares in 2 years at 150. No. So if you're not sad at that and you're okay with that, then this is a great strategy for you. No question about it.
No, definitely not financial advice. People do not do
no. And look, don't follow me on trades because I don't get everything right and I don't know anybody's situation. These are just numbers from the option chain and what we're discussing.
Does anyone in the chat have any questions for Steve?
But the other thing that's interesting is maybe buying Tesla shares and writing some cover calls against it.
That's not a bad strategy too.
For growth investors,
just hold on. Buy them.
No, but it gets to your price, and if it escapes, and you lose it, then well, so be it. But you did make something on it.
I mean, think about this: at 300 strike price on the October 2023 chain, so that's 4 months away.
Yeah,
300 strike price. You write one covered call, you're bringing in $1,225.
What's the return on that? What's the return?
You're saying you sell this call. You sell this call to someone.
6 months from now, basically.
Yeah, you're selling somebody the right to buy your shares at 300 4 months from now. The return on that premium is 5.1%. So
that's what I say. As it gets lower, it just gets better. It doesn't get worse.
Mm-hmm.
Yeah, look, Tesla's got huge option premiums. Tesla's a great stock if you are playing different option methodologies because it's got huge volatility and huge premiums. Yep. There's no question about that.
Okay, any questions from the chat or no? It's been an hour and 15 minutes.
Oh, I really appreciate it. It flew by. I hope it was the same for you guys in the chat. I could have done this like another 40 minutes either, just because
I have no responsibilities. So if you want to keep going, we can.
Super interesting. It's super
okay. You and Carlos are starting your own stream now and going on.
No, I got a kid inside that I gotta get to.
All right. This is awesome. Thank you, everybody. Thank you for your time.
Yeah. Any final thoughts to you, Amit? So watching us all go back and forth about it. How do you take that? Yeah. Take us out of here.
How did your finger taste?
It was good, but I can't talk too much because the nurses said I was being so loud. So I'm just going to shut up and you guys can end up the pod. But it was good. It was a fun discussion.
Vitaly, you want to take us out?
No, it's good. It's always good to hear the other side. But even the other side, he doesn't seem that far away from what I'm thinking right now.
And I don't like being labeled a bear for the simple fact that
that's Amit trolling in the freaking.
I don't.
That shit.
I'm not one of these Tesla doubters. I don't like the current numbers. But
I would say yours was like middle of the line, not that overvalued, but not a great deal. That's what it sounds like.
I try to look at things from what I consider realistically, and I'll take us out with, you know what? I would consider buying shares in the future because Tesla's a great company. Nobody can say it's not. And if you say that it's not a good company, you don't know business. Period. That's it is what it is.
Yeah.
I think if the valuation comes down, I'm a buyer.
Yeah.
And I don't think the valuation needs to come down.
What I think is funny, I think you started this. I got to watch it again, but I think you started this stream more bearish than you are now, and we didn't even say much. You basically just.
I listed all
he convinced himself with his own DCF.
I listed all the catalysts that it has. I just don't like the current valuation for the amount of profit it generates today.
I just think you want to be in this. Dude, if you saw, look at the pop that we got when they just said that they're going to open up the NACS. Do you know what it's going to be like once that once those Cybertrucks delivery starts and you start seeing every celebrity, driving one of these, every music video's got, it's going to be insane. I think
what's your price target? Just send it up.
I think I said it before. That was a buyer around like 160, 165, that area.
Okay.
We'd have to go back and rewatch. I don't want to say something different, but I think that's somewhere where I would be very interested.
I think, anything under 180, 190. I've said this before. That's a great price.
Yeah, I think it's a good long-term value with that price.
And with this stock, you could probably get there. We might see 120 again. You just never know.
I just don't think when people start throwing out these huge multi-trillion valuations now or creating overvaluations for 5 to 7 years from now that at least my brain can't wrap around. It just seems unrealistic. But I think if you look at this realistically, Tesla should be a very good investment for a lot of people going forward. I don't think people should discount that because this is a team that wins.
The other side of it is there were some people.
Winners keep winning.
They do. Look,
what
doesn't sleep
was
for a reason.
TJ's thing, right? You can't argue with results, right? Results speak for themselves. But look, all I'll say is this, and maybe this is how we end it. There were some people when Amazon cratered 90%, there were some people that did see the moonshot. They did see it, and they were probably screaming at it from the top of their lungs. There's people that saw it. And at the time, they seemed absolutely ridiculous.
I think we were buying Amazon
I don't think we're as ridiculous as
2016. I mean, I remember we paid like $9.50 for shares.
Insane. Pre-split.
Yep. All right, guys, this was fun. Great.
All right, guys.
Yes, everyone, please like and subscribe. Follow, subscribe to the new channel because we're doing the Sunday podcasts there. I am going to try to convince the guys that we're going to try to do the Sunday podcast at an earlier time for our overseas audience. I've been promising that for a while, and why don't we try to do that? Follow Steve on Twitter, chock-full information. Follow all of us as well.
Get all my content on Seeking Alpha.
I'm Axl Rose on Twitter now, so follow me.
Yeah, because Vitaly's bit the bullet and he paid for the blue check, didn't you?
I'm gonna pay for it because this asshole won't let me freaking change. I misspell everything.
No, it's because you got 1,000 followers. That's why.
No, that's not why.
Yeah,
I can't change all my misspellings and I have people.
Well, by the way, congrats to Vitaly getting 1,000 followers. That's a very, very good thing. Carlos is up next, so congrats to everyone. That's awesome.
Vitaly, you're gonna like my Enphase article. I did a lot of renewable research on it with projections for what the EIA, the IEA, and companies like BP. BP does some of the best due diligence for their global energy outlook report from all the super majors. And when you look at where renewables are going, it's very interesting.
I agree. Okay.
So we should pick it up. We should pick up that topic.
I would like to see your DCF on Enphase next. Maybe we do that.
Yeah, just let me know when. That's
a little easier, I think. It's a little easier.
Yeah, a little easier to.
I would like to see that. All right. Bye, guys.
I'll send you the DCF sheet. You can just plug in the numbers.
Okay, that'd be cool.
Just shoot your email in the private chat. I'll send you the DCF now.
You got it.
Thank you, everybody. 392 people in the chat and watching.
We had 460 in the peak, but yeah.
All right,
guys.
Thanks so much. Good night, guys.
You see it?
Yep, I'm sending.